to the scene. It's your host TTP. We're flying high in the crypto sky. It's you and me from Bitcoin Rush to Ethereum. We trading all the coins with the trading parity, making that joyful noise. We got bots, we got plots, charts on the big screen. 3 comments to wit, hunter with a trading machine. Laughing all the way to the bank. It's a fun parade. With every trade we made, watch how we get paid. TTP's got the formula, flipping coins like a spatula. In the crypto game with the vernacular, spectacular. From the morning to the night, we're streaming with the light from the trading parallel. We'll teach you how to fight. Dive into the charts, the RSI, liquidity at a glance, trends on the rise. We never leave it up to chance. All tradiganium, tools of the champion breed. With AI and math, we're planting the money seed. Laugh with us, trade with us, ain't no looking back. You're with the parrot now, leading the pack. Alpha profits, snap plus with the crypto law. TTP's on the mic and he's ready to soar. TTP's on the mic and he's ready to soar. TTP's got the formula, flipping coins like a spatula. In the crypto game with the vernacular, spectacular. From the morning to the night, we're streaming with the light. Join the trading parallel. We'll teach you how to fight. Dive into the charts.
Hello guys, welcome to the Trading Parrot. Today we have the PPI report, and it's been 24 hours of one report after another, one meeting after another, and the volatility was quite intense, but actually we went back to where we came from. Many bullish news. We heard things were sounding bullish in the reports, but unfortunately it hasn't been enough. At least on the 4-hour time frame, I'm still seeing some weakness. So I'm inviting today Keith from Material Indicators. I have it here in the stream. Hello, Keith. How are you?
I'm good. How are you? I had a bit of a challenge connecting today. I don't know what's up, but my connection failed. But I'm here. I have no idea if I'm streaming on any of my channels, but I'm here.
It's very good to have you. It's been quite a while. I'm sorry, I've been a bit busy with family challenges.
I'm familiar. I'm familiar. Been there. And still have my own. You're at the beginning with your family, and well, I'm somewhere in the middle. I got one that just graduated high school and is on her way to college. So
Yep.
yeah, I got all that going on too.
For those who aren't familiar with Keith, we have been doing some streams, and we quite been collaborating as well, looking into Bitcoin and on Twitter. He works in Material Indicators. If you have been watching my streams and my videos, I constantly use it's an amazing tool to look into the order book. I like looking into so many sources of information, and one of the most trustworthy that I found maybe 1 or 2 years ago was fire charts, and really impressed me. And since I started posting so much about that, then I got to meet Keith, and I asked him how to use it even better, and he gave me so many insights. So today we can look into that. We can look into the order book, and I'm very keen to hear what are your takes after having completed these 3 meetings, in terms of comparing the price, some weakness. I don't know. I haven't catch up with you, so I don't know really what you're going to tell me. Maybe you're super bullish. Maybe you're super bearish.
Let's see. Should I just do like a spoiler alert and just come right on the top, and we can wrap this up in 5 minutes? You know what? It's been interesting, and I have, you often hear the term about the only thing better, it's hard to time the market. Better than trying to time the market is time in the market. That's certainly valid for a number of reasons, including the fact that the more time you spend in the market, the more you get to learn and study how it operates around events like we've had here these past few weeks with the economic. We get economic data every week, but it's rare that we have economic data and a presentation from Fed Chair Powell, or an FOMC meeting and a presentation from the Fed Chair all culminating at the same time. And I think the past 2 weeks we've had multiple events kind of overlapping or coinciding through the week, and over time, I've detected a pattern of behavior in the order book, and what that is. Oh man, I'm just noticing the trippy lights you have in your background, and that's very, very cool. I'm going to stare at that for a little bit and be hypnotized. Um, uh, so and right, you see me looking at fire charts, you know I like colors. So what tends to happen around the major economic reports and the FOMC meetings is we see kind of a game being played by I like to call them predatory killer whales. Right? We got whales. There's whales, and then there's killer whales. And the killer whales are the ones that are playing those weekend whale games, the ones that are trying to shake you out of your money, shake you out of your Bitcoin or whatever asset you're trading. And those are the ones you really have to watch out for. And the pattern that I've noticed here over time, and I'm going to go to a little bit longer time frame chart here so that maybe we can see it a couple of times. I'm going to go ahead and share a chart, and I can talk through this if you don't mind. Let's go into fire charts, fire charts 2.0. And, for those who aren't familiar, this is a thermal heat map of the order book. And, you see a lot of different heat map products online, and they all do different things. A lot of times you're looking at a liquidation map. This is actually limit orders in the order book on Binance. We support, every BTC and USDT coin pair. So we can look up like roughly, I don't know what, like 800 coin pairs. And obviously my focus is very heavy on Bitcoin. Up top here, we have the thermal map of the order book. These are limit orders. Down here, this is order flow. This is our binned CVD, which shows order flow, and it's binned by order class, with brown and purple being the largest order classes. Worth noting that these big whales, these big mega whales, they could disguise themselves as any smaller order class. Whereas, if you got Retail Willie, he cannot disguise himself with his $300 trading account, can't disguise himself as a whale with $1 million order, right? So when we first started this, it was evident that retail was in this smaller class. They certainly live here now, but it's often dominated by whale-controlled bots. So keep that in mind. And so in terms of this game that I have identified, we often see them really exploit the liquidity, especially the thinner liquidity, and they often create those pockets of thin liquidity by first pushing price up. Sometimes there's a roof pull in the situation that allows price to go up. They push price up, and then after they've cleared out that liquidity, it's easier for them to push it back down, or vice versa, right? Same thing here, up, chopped for a little while, and a roof pull lets things go up, and then they hammer it back down. And we saw this happen here, twice in the last week? Look at this. They push price down, thin liquidity allows it to come back up. They create that pocket, and they push it back down. I've been writing about this in my analysis, my BitBreak analysis here, literally since we dropped down on Friday, and every single day it has gone according to plan. And so now look at this. This kind of looks like a nice little head and shoulders kind of forming here right now.
I was seeing it too.
and in any or actually maybe it's just a middle finger, a big FU to the market right here.
Yeah.
Because that's what it feels like, right? And so, man, we may have just invented another pattern. I think a little while ago, a few months ago, you showed us a Batman head and shoulders, and now we have a middle finger, the FU pattern, developing here, right? We're breaking new ground on this stream. So anyways, this to me was kind of what I expected to happen relative to the economic data in the FOMC meetings. And so now now that that's passed, what's next, right? And so the data this morning, and I'm going to preface this by saying I am not an economist. And so, I do my best to absorb the information, and I watch a lot and read a lot of news about it, but it can be difficult sometimes to know. A lot of times, we can know, okay, if unemployment is up, That is something that the Fed is looking for. That would be a bad news equals good news scenario in terms of bad news for the economy, good news for Fed watchers looking for rate cuts. Yesterday, Chair Powell was pretty hawkish. I think more hawkish than most expected relative to the data we had seen in the past week or so, and certainly today's data. Also, I would have thought would have facilitated a pump. It still might. A lot of times we see fake outs after these moves. It still may, but right now we can see some suppression happening, and where that is evident is, obviously we have a lot of ask liquidity up here. This is very strong resistance up above. So the first dynamic that I'm looking at in the order book is that, resistance, liquidity-based sentiment, liquidity-based resistance is way stronger than the bid side at this point. And I've been saying this for months. Until we start seeing the strength on the bid side stronger than what we see on the ask side, I don't expect to see a sustainable breakout. And we've had how many failed attempts at breaking 69K? I mean, dozens of failed attempts at a validated RS flip here, right? And so this is the halving, by the way, this vertical line. And people thought, oh, after the halving, we're going to rocket right up. No, not necessarily. We have a history of consolidations and a history of corrections after halvings. So what we're seeing is not out of the ordinary. Okay, this is well within the bounds of what we've seen historically. Now, what concerns me a little bit is that we lost this 21-day moving average, but I do like that we have solid support on the 50-day without wicking below it, the red 50-day moving average here. And today, this morning when I was writing my analysis before I went live, I was talking about the fact that we had, that we were on our second day above the 100-day, that's the blue line. And then by the time I went to record, we had already busted through it. So that's weakness there. Now, will this 65K hold? And if it doesn't, where do we go? Or 66K rather is where this red 50-day moving average is. If it doesn't hold, where do we go from there? So this red box here is a area of historical importance, 58 to 60K. And gosh, I got a lot of stuff on my chart. Sorry, I need to clear this out for you guys. But since the 2021 top, this was an area of distribution actually, but we do have a lot of confluence in this area that gives this range some historical importance. The problem is, where is the liquidity relative to that? And at the moment, we just don't have a lot down there, right? Need to go to a wider view to get to that level. There's just not a ton down below that. I'm going to go out even wider. Geez, let's go to the 1-year chart, and we can see here that liquidity is actually pretty thin and thinning below 60K. They're just not does not appear to currently be any liquidity based sentiment for that. Now, this ladder of bids is good to see. But I'll caution you that we saw one come in yesterday or the day before yesterday briefly. It got pulled, price came down, and then it moved back in place. So we'll see if this one holds here. If we lose this level up here, I'm concerned that we go to 65, and I just don't see a ton at 65. So that would facilitate a pretty quick trip to 60K. If we lose a 65K level, in my opinion.
Sure.
Now, nothing inspires liquidity movement. Nothing changes sentiment like price. So if we do break below this level, then I anticipate seeing more liquidity come into this place.
What do you think about the divergence? This is something that I was going to ask you before jumping into the stream. I see a divergence between the price and what the purple whales are currently doing, both on the month, 6 months. It's very clear. They're going up and up and up and up, and the price is coming down and down and down. So what do you see there?
Well, remember at the beginning where I said whales could disguise themselves as any order class?
Mm.
So indeed, the purple class has had the most influence over Bitcoin price for the literally as long as we've had this chart, since 2019. Okay, so we're talking about almost 5 years now. So yes, that is kind of my moral compass for the most part. I look at combinations of things. I don't go off of any one thing, but this is often a way to determine, um, on higher time frames, accumulation versus distribution periods. So that is something indeed that I watch. But it's also important to look at what may be going out. What they may be telegraphing on one side, and what might be happening out the back door on the other side. Right. So if we switch to the absolute CVD, we can see, for example, in the past month, these purple whales have bought nearly $300 million worth. And this is just market orders, okay? 300 million market orders. But collectively, all the order classes are, and look at brown mega whales relative to that. $3 million, that's nothing, okay? That's literally just used almost like an icebreaker on a ship in the Arctic Circle, right? It's used to break through levels. But look at how much has been sold. 257 million, which is inclusive of the 303 million that's been bought. So that means 500 and almost 500, like 560 million has been sold relative to the 300 million that's been bought.
Yeah.
Does that make sense to you?
Yeah. Yeah.
So I can't read in this situation. Sometimes you can read into the divergence. In this situation, I caution to read into the divergence because I think that there might be a little bit of how should I say, smoke and mirrors going on here.
Yeah.
I can't
I
prove
think it will
that,
be.
but it seems like a plausible possibility.
I think it will be great if, with material indicators, we were able to somehow expose the BlackRock inflows and outflows. Not necessarily that they are not buying or they are not selling, as they are indicating here that they're doing. So they claim that they are doing all these transactions every day,
Right.
but we don't know the actual wallet, or the group of wallets that belong to each of
Right.
these ETFs. So there's no way, at least as far as I can tell, to prove that they're doing these things. If you know anything, please let us know in the comment, right? But if you see 4 days here of buying, of heavy buying, and unfortunately this chart doesn't show the price, but I tell you, after these 4 days, the price was going lower. And in here is a very substantial amount of buying. You have 886 million. So on the 4th of June, you have 886 million in buying. So where is that, in the order book? That's my question.
Okay,
And then you have 3 more days.
that's an interesting question, and as I understand it, and I've also been tracking the ETF flows, and there were literally, I think, 19 consecutive days of net positive flows, up until this week. Then we had two red days, and then yesterday was net positive again. And I don't read too much into this because I think this is normal trading. To me, the biggest difference and the disadvantage that these ETF traders have versus what spot traders have is that they can't be. I don't think that they are able to be as nimble. At least not how this is reported, anyways. Okay, so you can execute a trade. Let's say you're trading at BlackRock or Fidelity. You can go ahead and execute your trade at any time. The settlement, I'm not sure how they settle. I'm not sure if your trade is going to go in probably at the price that you set. But what gets reported here doesn't come in until after hours settlements, right? The other aspect of this is, I think that Coinbase is custodian for the vast majority of these ETFs. which is why we see their volume spiking and their stock price spiking, by the way. So what I'm showing you on Fire Charts at the moment, Fire Charts only supports Binance. So we wouldn't be seeing that liquidity unless the OTC desk is shipping it out this way, and even then would we see that in terms of an OTC order. Maybe these blocks, maybe these ladders that we see, and there have been periods of time actually that we saw some behavior that looked like it was relative to the ETFs. For example, let me go to a yearly chart here, because this is something that we were tracking earlier in the year. So I will show you this in terms of the ETFs. Early on in the year, we saw this red class. This literally started on like Christmas Day. We saw purple whales, brown whales, and I call them sharks, this red class buying. And red was really buying exponentially more in volume than the other order classes. I mean, billions worth. And this started kind of with the speculation that the ETFs were going to get approved in January, and then it just ramped up. So for a long time, up until mid-March, and we hit that all-time high, red was really leading the charge on a lot of this, where you see purple was, and I'll clear out some of these other order classes to make it easier to see. You see that purple was basically buying dips and selling rips, but net positive. Red was just on the gas. I mean, it was like, seemed like they were T-whopping for a while here and just on the gas accumulating here. And so that obviously they've rolled off the top. This is, and again, this doesn't concern me because this is big profit, right? If they started buying down here and they started distributing up here, then they're doing exactly what every disciplined trader probably knows how to do, right? And that is buy low and distribute in a higher range. And so they're happy to keep chopping sideways here and distributing into this range, right?
But shouldn't it be the opposite? I mean, those are 10K to 100K, so those aren't the largest ones, not
Right,
the
but they're 10K to 100K, but notice two things. Number one, we do have a lot of periods where the liquidity is thin and you can't make as many larger orders without slippage, right? So they can do this with more frequency and less slippage. The second thing is the volume. So we're looking at a normalized view right now. And something you have to understand between a normalized view and the absolute value is that normalized, we're looking at each order class, what they've done relative to themselves. So in this instance with red, okay, they started, and it's normalized in a range of 0 to 1. So think of this as a 100% scale. So as of just before Christmas, that red class, they were almost bottomed out, right? Right here you go. This is Christmas Eve, down to 0. They had sold everything that they came into this 1 year period with, right? And since then, they had accumulated. This was their 100% level up here on March 18th. And since then, they have now sold roughly 80, 20, what is that? 25%, 23%, something like that of what they bought, right? So they've taken profits on 25% of what they bought. In terms of cash volume, now when we go to absolute value, we're looking at how much cash money have they spent, or how much USDT in this instance. Okay, and in this time, from what we said, Christmas Eve, they were bottomed out, right? So Christmas Eve, they were down to negative, we'll call it negative 2.6, let's just say 2.5 to make it easy.
Yeah.
Negative 2.5 billion. By March, they were up 2 billion. So that's over 4.5 billion in net purchases to get to that level, right? They were down -2, down -2.5, and then came up to +2. So that's a $4.5 billion worth. And so relative to that, look at what purple whales did. Less than, okay, so where were purple whales on that time? On Christmas Eve, purple whales were down $500 million, negative $500 million almost. And so they bought $500 million in that time versus $4.5 billion that red did. So the volume was really there for out of red.
Mm-hmm.
And they did it, they did it with smaller orders. And you see this smooth just these smooth, steady lines without a lot of wiggle in them. And you can see, and that's better to actually look at on the normalized view. When there's not a lot of drama in the line, when we see smooth lines like this, that's an indication that there's T-whopping going on. And there's a mix of maybe there's a mix of that and a mix of, other orders in here. So it's not 100% of this order class that's doing this, but it's obviously what's dominating that order class during those periods. So that's why it's important to really look at not just the shape of the lines, but also look at the volume, because we naturally think, oh, these brown whales, they do way much more. There's a bigger order class. They're the ones controlling everything. So it's misleading to just go off the normalized view, because we can see here that brown whale volume is actually only $200 million over the last 365 days.
So is it part of the point as well that the large whales, in order not to get exposed, they are just fragmenting their orders and acting like small sharks, and in that way they get around with getting the liquidity they want?
I have no way of proving it, but I think that this red class, at least during this phase, has had a lot to do with the institutional demand, whether it was indirectly buying on behalf of those institutions. That I have no idea. It may have just been somebody wanting to ride this, kind of ride this wave. Or maybe they're feeding those institutions. Who knows? It doesn't really matter. The net effect is the same, right? Of what it did to price. This is what drove price up so high, so quickly. And so, yes, I do think that that whales will often disguise their orders in the lower order classes. Sometimes it's out of necessity, just because they can't you can't make a $10 million market order through thin liquidity, because you're just going to slip through the whole thing, right? So sometimes it's out of necessity when the order books are thin, and sometimes it's just not to telegraph what their intentions are. When somebody market orders $1 million, they're doing it to show you what they're doing. I mean, I don't work with a stack that size. I don't know about you, but if you did, would you make $1 million market orders?
Mm-hmm.
Would you?
No.
Exactly. So when they do that, they're trying to, in my opinion,
to make a point.
They're trying to telegraph their intentions.
Yeah. There's something I wanted to discuss with you as well, because everybody's talking about the interest rates, the cuts. When are they going to eventually happen? Whether it's going to be just one, multiple. We just saw that the likelihood of getting 3 just got reduced to maybe possibly just 1. And actually here I have an interesting chart. I think this jobless is indirectly correlated or anti-correlated with the interest cuts, because
absolutely,
you got the jobless, and when something breaks, basically they get more pressure, they're forced to do the cuts. And what we see here is interesting, because at the same time that you were showing that this red class was buying like crazy, we got the jobless at the same level that we have right now.
Right.
Of course, at that point, we were also talking about the ETF That was the bullish news. Everybody was talking about that, but at the same time, we were getting this report of jobless as high as what we currently have, which is I think is 242 today. It increased around 20K. These numbers, who knows if they're the actual ones, or they're faking them. Maybe they're higher or whatever. But what we do know is that they cannot get away with keeping that forever with so high interest, because it's gonna break this, and that eventually means cutting the interest, maybe forcing their hands to do it, even if their plan wasn't to do that. So do you think, question number one, the cutting the interest, do you see it as something bullish, or as the point of break where you enter actual recession? And number two is, what's your expectation for cutting rates? What's your forecast for 2024 in terms of cutting rates?
Interesting. And let me see if I can find this chart. We were actually having this discussion in our Telegram community today. And so somebody chimed in and said, oh, well, the last, 9 out of the 10 last times that they had cut interest rates, that signaled a market top. Turned out that was false crypto Twitter information. There are many times where it did indeed mark a top, but there's also many times that it indeed marked a bottom, or especially when there were multiple cuts. So this goes back to, I'm going all the way back to like 1969. Okay. And conditions are different. Inflation was different. Cost of living was different. Value of the dollar was different. Situations, why they cut or raised, were completely different, right? So I don't know that we can necessarily say there's a comparison and go, oh, this time is just like it was in the 80s or in the 90s. But it's clear that the only thing that came clear from looking at all these different periods that they cut rates, and the yellow line here is the Fed funds rate being cut, and you can see that there were times where it indeed marked some toppiness, and there were times where it seemed to fuel the rally. And so the only thing I could gather from this was that there is no linear chart that we can look at and go, a cut means it's going to go down and a hike means it's going to go up, or vice versa. I think it is always dependent on the situation. And so
what about the first cut? I mean, after a period of increases, the first cut, what is it, the typical effect in this chart?
Again, there's no typical, right? No. So here's a situation. We'll go near term and then we'll go further, because the ones further out look better to me, right? Here's a situation where the first cut was still going up. This was COVID though, right? So that's a bit of an anomaly to me, right? So I just kind of take that one out of the equation. Here's a situation where the first cut was, marking some toppiness. Second cut started the cascade. We know that we're in store for multiple cuts to get back down to a reasonable rate, right? Again, this is 2000. This looks like 2000, and cut led to the downside. Here was another cut, and that marked a bottom. I don't have a line here. I should have one. I should have a line here. So there's no direct correlation that I've seen that we can say first cut or second cut. That said, when we get into periods of multiple cuts, okay, so here we go. There was a cut here. This looked like a bottom, and then they hiked again. So I don't think we're going to get in a period where it's cut, hike like they did here. But in this instance, we saw a cut was pretty much marking the bottom here, and then there was actually, here's the second cut here, also marking that bottom before they started to move up. Cut here, things move up, and look at these progressive cuts. And this is what I think is going to be more indicative of what we see in terms of cuts. I don't think we're going to see them cut and hike and cut and hike. I think we're going to see cut. These look like there were little quarter point hikes maybe along the way. So I really think it's difficult for us to say that it's going to be that a cut is instantly going to mean one thing or the other. I think it's going to be dependent on whether really what it means for the economy. Are we cutting because we're on a sustainable trajectory to get inflation back down to 2%, and the Fed is going to glide us into a soft landing? Are we cutting because, oh shit, we fucked up, we should have cut already, and we're headed nosediving into a recession? And so I think that, and again, I'm not an economist, this is just my best understanding of it, I think that is going to be the overriding determining factor of what cuts actually mean for the market at the time that it happens.
Yep. And people are also getting excited today about some other news that I wanted to bring in here. That Michael Saylor is thinking to buy 500 million Bitcoin buy as soon as he can. Of course, some people are going to say, "Oh, yeah, that's bullish. He's always buying." But some other people are going to say he's always buying tops. So, what do you think this is bullish? This is showing that he's still with strong conviction that we are not at the top of the market, or he's just going to buy blindly at any price?
I think that I think that he is. You say he buys tops. He definitely did. He's definitely not a guy that is trying or appears to be. If he's trying to time the market and buy dips, he's not doing a very good job of that. So I would say that that's probably not his approach. I think that he's probably trying to telegraph confidence in the market as much as anything. So yeah, a lot of his entries sucked, but in the long term, how does he end up? What's his average entry price at this point?
Yeah, absolutely.
Right. So I think this fundamentally injects confidence in the long-term view. And again, here's a guy who's has a price target to sell at never, right? so he thinks that this is perpetually up. Now, I personally don't think that it's a reasonable expectation to think that this goes up forever and that you never cash out. But I'm here trying to make money to support my family. So, at some point in time, I find opportunities to sell and then buy back in lower and, repeat that exercise. That's trading to me. He's not a trader. He's an investor.
Yep, I see.
What's your take on it?
I normally don't pay attention to what he's doing. I think that's just advertising for maybe people that don't have any other means to decide what to do.
You know what else he's advertising for?
What?
People to invest in MicroStrategy.
Oh, yeah, absolutely. Yeah.
So that's indirect exposure to Bitcoin for people who maybe aren't messing with the ETFs, or and don't want to get into the spot market or trade perps or whatever.
Keith, I like to share a little bit of TA with
Mhm.
you, and I like to hear your thoughts on what
Bring
I'm
it.
about to show you. So I got here the daily chart. So we got this flag here. Today I added this new line of support from here to there. I think I borrowed it from somewhere else. It's not my line, but I did like it. It makes a lot of sense to me. And we got the bullish flag. We had the breakout here where everybody got excited. Then we have some market cipher divergences here, two tops, and then we came back here. And my read on this is that we are nowhere because we were in the breakout and we should have, done the breakout just like we did in the previous breakouts. When we have a technical target, we got big candles and explosive move, consecutive green candles, same story all the time. But in this case, we just got the breakout. And after that, everything is melting. We get two tops, various divergences. But at the same time, why am I saying we are nowhere? Because I would have preferred that we get the breakout and we call this a liquidity hunt, we go back into the range, we break here, and we start building some new structure there, and we do another attempt. And that will satisfy the hunger of the whales, it will satisfy all the shorts, satisfy everybody, wreck all the longs, and then we can move on. But we are just here. We are nowhere. We are in the territory still of the breakout. So we still have a lot of YouTubers talking that the breakout is just going to play out anytime from now. So that you have this mini flag there that is going to break out there to the 76. And you have this major flag that is going to take us to this other equivalent here at the 92. And people keep screaming about that, and they're still not convinced of one or the other. You have bearish things and you have bullish things. You're in the middle of nowhere, and you're still holding support from the flag. You're still holding support from the trend line. And yesterday we're faking out here with one of the meetings. We actually took a long right there at support, and we sold 67. Some people sold 69. They got lucky. But I wasn't sure we were going to overcome this that time, so I took profits. But it's really not yet ready to decide a decision. I think Bitcoin here, I will prefer that we break below and we get a clear direction. Unfortunately, Bitcoin might do this with us. It might keep us here in a squeeze, or even going sideways and not doing anything. And that's going to be painful. Maybe all July is just going to continue the boringness of zigzag moving, where people getting excited, the opposite team every
If
1 week.
we chop all summer long, I would not have a problem with that at all. I'll be honest with you. You know, let me ask you this. Do you think that sentiment and FUD and FOMO, for that matter, do you think that it would all be different, if the dynamic would be different, if we hadn't yet created a new all-time high?
Mm. It's almost like the all-time high didn't do much. I mean,
Right, it didn't do much, but raise the question for people to speculate, okay, is this the top? Is this all we're gonna get, or are we gonna get more? And so if we didn't see that before the halving, most people expected to see it after the halving. If we didn't see it before the halving, would we be having a different conversation at this point? Would we say, hey, this is the consolidation before the breakout?
yeah,
And
yeah.
so I still feel like this is the consolidation before the breakout. And hopefully it develops into a breakout. But what if it doesn't? And so you have to be prepared for every scenario. Where did my chart? Where did my damn chart go? So whatever the case is, right? I think that the fact that we have had so much trouble breaking 69K, and that's why I've been focused on that level, right? Everybody's talking 70K. And it's fine. 70K has some merit. 70.5, 71.5, a lot of confluence at that level. But for me, 69K has been really telling. It has been, obviously, it was a level of prior resistance. It was the all-time high for over 2 years. And literally, just about every single candle that's interacted with it has had a wick below it. And so I've been looking for that validation, to get back up, to go after this all-time high. You can't get through there without coming through here. And so, yeah, we've wicked up there a couple of times, but none of those candles were sustainable to me because they had some downside weakness. And so this is the level I'm looking to flip and validate a flip at. And then let's consolidate above this 69K. Then take out this level here, the all-time high, and then we can talk about price discovery from there. But I think the structure looks good. I think that if we can stay above this 50-day moving average, that would be important. And if not, this is really the last line of defense before things start to break down further. You have the 200-day moving average now coming into focus relative to our lower low, right? So all of these technicals are lining up. That's pretty interesting to me. In my opinion, if we create a lower low here, then I think we're going into that prior consolidation range that, right around here, 40, 45K.
Well, so that's your worst case scenario.
This is worst and worst and by some aspects the best, right? We had some consolidation here at 50 to 52K. We had consolidation for a longer period of time here in the 40 to 45K range. And I think that the confluence that we're seeing now, again, I don't see any bid liquidity in those ranges yet to make me think that we're going there yet, if at all. But if this breaks down, if we break down from this, then I think we go here pretty easily. And if we lose this, obviously the lower low comes into focus. And if we can't defend that lower low, then we have to identify what the next potential targets could be. This is the nearest consolidation range, but it is short-lived. This to me actually has confluence. I have to go find that chart again because the chart I had up shows that. Here we go. So this has confluence with my trend line. And if we look at the weekly chart here, we can see that if things did break down from up here, then we now have this prior consolidation range, not much around it. This prior consolidation range in that 40 to 45K range has more confluence with the 50-week moving average. And let's say it takes us some weeks or months to get down to that range, if that indeed happens. If we break down through this lower low, then that too would put the trend line with confluence somewhere in this range. And that to me, like your illustration where you wanted to see us go down and test that trend line, this would be the strongest place that we could stage a move for the next leg up.
Yeah. It makes a lot of sense. It's not guaranteed that we go there.
No.
But if we go there, we have already prepared the narrative. Like,
right.
For
Not
example,
only is it not guaranteed, I don't even think it's a high probability at this point, right? If we lose this lower low, that's when that probability comes into focus for me.
The 56.
If we lose 56.5, there may be some hopium at 50 to 52.
Yeah.
Right. Maybe we see liquidity move to that direction, but structurally, this is where I'm looking.
Yeah. But typically in the bull market, what we've seen is that every time there is an impulsive move to the upside, prior to that, there's a liquidity hunt to the downside. So it usually wicks down to the downside, grabs some shorts, and then uses that as momentum.
And that's exactly the move that I was expecting to see this morning, right? That is exactly the move, because we went down and hunted liquidity to 67, and I think I have a Kingfisher chart that I had saved earlier that shows that liquidity, and so I thought that was the next logical move. After clearing this, I thought we would go after this, and that still could happen, right? That could be what's developing. We could be, picking up the scraps all the way. Maybe they do go after every last morsel down to 65 and change. But it's, normally they're hunting the bigger clusters like this. So at the moment we've come through this and most of this. So that remains to be seen. So yes, I do expect that the next move would be to go here, but it just has not so far materialized.
Yeah. Something I wanted to show you is, for a long time, I've been very interested in doing analysis on open interest. And I think it's a very interesting source of information. Of course, there's so many different sources. And my channel, sometimes I make the mistake of looking into too many things, just to give me a bias, right? So if there's confluence, it's awesome. If there is not, my job is more difficult. But in this case, I started looking into indicators from this dude called Leviathan on TradingView, and he's got amazing indicators. Like, for example, this one that is showing your level. This is one of the levels that you talk about. So you got 6 million just on Binance in open interest accumulated here on both sides.
Mhm.
If you look at 26, of course, there's a lot more. It's just intuitive to think that if you were ranging in certain prices for very long, there were loads of orders there. And those act like a magnet. Of course, if the price comes back there, it will hunt that liquidity. And what I've been doing as well is working together between the open interest with the net positions. So what you have here at the bottom is a daily chart that shows a normalized views of the amount of longs and shorts. And for example, Bitcoin here came low. Sorry, Bitcoin price came low, but also the amount of shorts. You can see how the shorts are getting cocky here, and eventually they break this support and they get to a level of 30 in terms of amount of shorts. And at the top, you have too many longs. In here, you have too many shorts. And right now, we are at 43. And if we enter again in this area there, that's an area of interest. As you can see, for example, here, you got a top because there were too many longs.
Mhm.
In here, you got a bottom because there were too many shorts. Another top, or at least ranging here. And then you got a few local bottoms in here of people getting too bearish and wanting to short from there. And of course, those are key areas to get liquidated. But all this indicator is doing is looking at extremes of shorts, extremes of long, and putting that together with information of how much open interest there is. So there's so many angles you can look at this information, just extremes of amount of open interest, but you can also look at which levels were the source of all that open interest coming in, because that can also help you um, at least have an idea of where that explosion could go next. In this case, we can only look down. Unfortunately, we cannot see to the upside. We are near an all-time high, of course, so there are no levels to calculate there. But it is very interesting to put together open interest, funding fees, and on the side having the order book from material indicators and other tools. It really gives a big hedge.
Well, you want a fun fact about Leviathan?
What you know?
Well, if this is the same Leviathan that I know and love,
Mhm.
um, he is our very first material indicators license holder. He owns lifetime license 001. First guy.
Really?
Yeah.
That's fantastic.
Yeah,
And
we actually had an auction when we launched the company. We had an auction. We had a live auction for the first license. Like our infrastructure was tiny. We didn't even, I think we offered like 25 licenses, and he won the auction. He was the first guy.
so initially it was restricted to get access.
Yeah.
Oh, that's awesome. Before I let you go, if in your last 5 minutes,
Mhm.
and this is really me being very selfish, and I hope people are gonna find that interesting as well. But I have a question about global analysis.
Mhm.
Um, so the way I've been interpreting this with the alts is I look for these areas in red, right? And you have the beta of the altas, the alts and BTC.
Mhm.
And does this mean that the alts are outperforming Bitcoin? How do you interpret these areas in red, and how do you see people using this as an alpha?
Okay. Let me load mine, and I can talk you through it a little bit.
And by the way, while you're loading the chart, there's so much interesting information here. The other one I found super interesting is the price and returns versus the drawdowns.
Yeah, yeah, yeah.
Oh my God, these red areas here is like almost like exit the market, right?
Right. Yeah. So what's cool? The first one you were looking at, I think, was it beta alts versus BTC beta?
Mhm.
Okay. So if you scroll down to the bottom of these metrics, all the way down, there's a description that helps explain how you can interpret this data. So the top pane, obviously, that's showing price time, price over time. The heat map is the 2-week rolling beta of all pairs to BTC over time. So red represents low values, where blue and purple represent larger values. And so you can identify periods of large or low market beta, and you can also hone in on individual pairs. Right, high betas are typically near local bottoms. Low betas are observed near local tops. So you can, as I said, you can actually zoom in and hone in on specific pairs if you wish, but the market really tends to travel largely together. Obviously, if one asset is having something newsworthy happening, that might change things. But more or less, you can make your determinations on what's happening here, market wide. And this is. Let me get a refresh here. This is a good example when things turn red. Then obviously, and it's not perfect, and it could go on for extended periods of time, but it's an indication that things are getting toppy. Whereas when we get into those deep blues and purples, things are near a local bottom. And so this is a fantastic metric, and we rarely share these publicly because we kind of like to preserve this alpha for our for our subscribers. But
Mhm.
there is a realm of data in here, and we're actually working on some new stuff as we speak that is also pretty interesting that we're gonna add into the dashboard here. That is basically like a basic TA tool. Let me see if I think I saved a chart today. Let's see if I can share this.
And by the way, guys, there's a link in the description if you want to get a discount with material indicators. I think it's totally worth it. Just have a look at the link in the description in my YouTube channel. There's description there, and it says material indicators.
Yes, use the Trading Parrots referral link, and he always has a discount available. You always have your discount available. I will tell you that right now, we hit a nice milestone on Twitter this week. So we have a flash sale celebrating our 30,000 followers, and so a deeper discount is available. But still, use his referral link, and you can navigate your way there and use the promo code MI. What is it? I don't even remember what the promo code is now. I gotta
I think it's the trading parrot maybe, but you're gonna find it in my YouTube video description.
Yeah.
And I would really appreciate it because that's supporting my channel, so that's awesome.
Yeah, absolutely. So, by all means, do that. And so, anyways, yes, the metrics in here. I was looking for this other file here. Let me see if I can. I think I downloaded it as a file today. Let me see how it's going to let me share. It's going to do it as a screen share either way. So let me just open it to the screen, and then I can share this this other cool deal that we are working on right now.
Do you have
this is it. That's not it. Hold, please. Stand
I,
by.
I still don't get any screen. Do you have another live stream after this?
No, I did one just before this. So we have another tool that we're working on, and this is basically technical analysis for dummies. Looks like fire charts. So this is the working model, right? So we're going to change colors a little bit so people aren't confused. This is not liquidity here that we're looking at. This is these are resistance and support levels based on prior closes, based on a history of candle closes. And so you can see, then this one actually isn't as early. This is from a few days ago. So we've actually come through some of these levels at this point. We've got probably one or two candles after this. But this marks your resistance. It marks your support, and obviously the darker levels, the brighter levels still mean strength. And you can see that we've wicked down into levels of prior support here this week.
And sorry, 1 second. Strength based on what? On
Based
liquidity or number of touches?
based on the number of closes at that time, right? And so the brighter ones tend to be higher time frames, whereas the like the light red ones might be lower time frames. The brighter ones, like for example, this is, you see this yellow one up here, right? This is right around the beginning of the month. So this was, we had monthly opens and closes right at this level. Same thing here back in April, et cetera, et cetera. So
And-
some of these go back, way back. Actually, in the production model, we will go back way back in history. Yesterday, I looked at a version that went back to 2018, I think. So,
And which time frame is this using?
well, this right now, this currently, again, this is just a working model that I'm just, giving you a preview of. This is currently just showing the last 6 months or so, but we will, the production version will go back years. And so
That's
you can
awesome.
zoom out and see. Let me see. I don't know if I have that one yesterday. I don't know if I have that one saved here, but you could go back and you can literally see for years of history. Let me see if I can go find that one for you.
One of the things I would love to have in material indicators is alerts. I would love to have alerts. I'm not sure if you guys already have API. That will be, of course.
We're working. As we speak, we're building it. Or build. Let me rephrase that. We're building the infrastructure to accommodate that. So that is indeed what we're working towards. It has been a long time coming. I mean, literally years. We've been working on this, but we're in the process of literally a complete infrastructure rebuild that's going to
The
not only
developers,
enable some scaling, but enable a lot more tools, a lot more data, API capabilities, and more.
developers and engineers are the same as in the beginning, or there's been a few new talents in the team?
We have had one guy do everything, and that is my partner.
Why in crypto, every single project in crypto has one genius dude that's everything?
And we finally brought in somebody that we have a lot of confidence in. Part of it is finding someone that you trust, because you don't want your stuff getting stolen. And so that is just a matter of, finding your personal comfort level. So there's that part, but yeah, Fred has done 99.9% of the heavy lifting on every product that we have. And we do have somebody that's helping us now with some back end stuff that looks very promising, and we've been very happy with. So hopefully he's got more time for us, because we have an unlimited amount of work for him.
Awesome. So are you sharing the screen already?
No,
I
not
haven't
yet.
got-
I was distracted by our conversation. So let me see if I can find this other chart here. Really
Guys,
quick.
let us know in the comments if you think this is a better time. I find this time really good in the week. Like Thursday at this time for me is great. Is that good for you, Keith? Can we do that this next week at the same time?
I think we can. I have to look at my schedule, but as long as I don't have any appointments booked, I think I probably can.
Cool.
And I will confirm that with you here after the stream, so I don't have to pull my calendar up for everybody to see here in the stream. Let's see if this one. Yeah, no, I don't have a working model that I can. That I just have screenshots. I don't have a working one that I can pop up to show you way back.
Well, you can say some for next week to keep us,
Absolutely. Here you go. I'll at least give you. Oh, I gotta move it over here. I gotta move it to this screen.
Oh my God, there's a comment from Parrot Believer. Is that like Justin Bieber?
Right.
You know, they are called the Believers or something
Right.
like
The believers.
that. Yes. You're not sharing the screen yet. There you go.
How about now?
I'm getting something.
Okay. But it's not showing the right chart. How is that possible? I have this on full screen. Nope. Not gonna. Oh, there it is. Looks like it. Did it pop up? No, that's still not the 6-year chart. Okay. I don't know what's
Sebastian,
going on. I have it on Telegram and I'm trying to show it to you, but not happening. So we'll save that for another time.
let's save it for another time. And the last comment we are getting from Sebastian says 67,200 must be recovered. And I guess he means that if we don't get to that level, if we don't close there, there's no more upside.
What level is he saying?
67.2.
67.2. Where are we at the moment? Huh. Well, I do not like the fact that we I was very pleased when we actually moved up to 67 because I like that as a consolidation range. But in terms of where we sit on the chart, in terms of technicals, for me, I want to see this red 50-day moving average hold. That's a little bit lower than 67. That's at 66. That's right at 66. So that's a technical level. The blue is just shy of 67. It looks like we're creeping back up above the 100-day moving average. So to each his own. I put a lot of stock in moving averages, and so if this degrades, though, I do believe that we go a lot lower. Now, I don't think that means the end of the macro bull trend. That doesn't invalidate for me until we get much lower.
Yeah, actually, I have marked the same level that Sebastian was showing us. Is this line here? I have it at 67, 138, but it's just the same. I could move it slightly higher. I just align it with the resistance here. And these boxes are showing, by the way, divergences. You got
Okay.
divergences against the inverse of the VIX and NASDAQ, and divergences absolutely against everything. This is an amazing indicator. In here, you're starting to have some bullish ones that got triggered by this green candle that is not very bullish because it got sold out. And now we're doing a lower low, and we are hitting that support once again. So you see there's so many wicks here below.
Yeah.
So technically we could come and do that thing again. It's just a matter that traders, they get used to doing the same until it's wrong. Until eventually you hit a big stop loss and there's a snowball effect here. And then my target, I think I gave this target many days ago. And I say, if we close below this, my target is 62.4. That's what I'm expecting. Some people are talking about 61. If we lose it as well, that's fine. It's just a range. The point is, there's a vacuum here. There were no many orders, so it's like a slide. It's already with butter. It's very easy to slip and fall quick, and that's why I'm expecting that to happen. But it could just become another liquidity graph and then push higher once again. So we need to look into candle closes. I think that's what I do.
Yeah, looking at candle closes, and of course, I'm always looking at the liquidity and whether we see buying starting with volume here. So at the moment, we do still have a fair block of bid liquidity at 66K. With secondary support at 65K. Well, the secondary support's actually stronger. And we just have to eat through this above. And if we can, then it's an easier move up here because you can see this area above is pretty thin, right? So at the moment, we are starting to see incremental buying out of most of the order classes, and I think they just need to eat away from here. And again, I said that I think I said at the beginning of this. If not, I said it in my live stream earlier today. I think if there's a whale game being played right now, I think what's happening is they're suppressing price right here to perhaps trick people into thinking that they're going to dump it. And so there could be, they've already liquidated most of the cluster of shorts that was down, the entire cluster of shorts that was down to this level. So
Mhm.
so maybe they're trying to load up and trap some new shorts, uh, and this is going to be an easy squeeze back to 70 or at least 69.
Yeah, I want to show you something. This is the other side of the order book. This is a different product called Trading Light.
Hmm.
Um, some interesting things that I'm seeing here we can compare later with fire charts. So it's been quite a long time that we have this 73 here, at least appearing on Trading Light. It's from the 24th of May that you got 73 loaded with around, let me tell you, 800, and that has been fluctuating until it became 1,000 around here, and then back to 800. And since today, suddenly they pull out everything. There's no liquidity anymore at 73, as far as this indicator shows.
On one exchange.
This is Binance USDTM. And the interesting thing is that if I look at what happened at that point, I see that the longs went very high, number one, around there. They started increasing with the pump and then started decreasing. And right now, we have a lot more shorts than we have had since around 28th of May. And this amount of shorts is interesting to me. It's also interesting that all these longs spook those orders from there. Maybe that's the wrong interpretation, but they decided, okay, we're done. Let's remove it. And at the same time that happened, there was a complete cleaning in the order book here. Like all the orders, eh, there's like a jump here. Like let's
Right,
change
right,
all the
right. Yeah.
strategy. It's because this went there to 70K and it got rejected. And
Hmm.
on the rejection, they say, okay, fine, no more 73 and no more this cloud of support here.
Right. So
Uh,
we saw that rug pull yesterday, and then actually the day before yesterday, and then some. Maybe it was late yesterday, early yesterday. It pulled, and then some reappeared here, and so you can see that. Let's see if I can. You can see here where it came back in. We had some here. Let's see if I can
mm,
make it even brighter. Okay, so you can see it. It's really kind of a faded cloud, like you described it, and you can see here where it ends, it disappears, um,
mm.
and then it came back as prices started coming back down. So it's here for the moment. Whether it remains here remains to be seen. I do like the fact that we're seeing at least some of it consolidate, at the 65K and higher, hopefully trying to defend here. But I want to see that. I want to see that lower low defended. This is the area that I think we really need to be conscious of, is that that we defend these lower lows and stay out of this zone, because that's a trip to paradise. If we come through this, pack your bags. We're going south for the winter,
It's so
or the
funny.
summer, I should say.
It's so funny the names that come out from from all these cycles. This is not necessarily a new one, but it's starting to resonate in many channels. That people say, "When are we gonna go into bananas territory?" I just find so funny that
I haven't heard banana territory yet, but it feels like we might not be too far away.
Someone should ask ChatGPT to make an interpretation of bananas territory, like diffusion kind of images produced with AI, of what is bananas territory. I could use that for one of my thumbnails in my
Right.
videos. It will be funny. Keith, it's been a pleasure to have you, and I'm really looking forward to next week. Hopefully, same time. We'll
Me
let
too.
everybody know on Twitter. Make sure you're following Keith. Make sure you're following Material Scientist. I don't have written here your Twitter, but we can leave it in the description as well. Give him a follow. He's every day, religiously in the morning, writing down an amazing report. I try to read it almost every day. So much alpha there. So have a look at his Twitter. We'll see you next week. Thanks
All
so
right.
much.
Thank you, man. Always enjoy it. Always enjoy it for sure. Keep it up. Enjoy
Cheers.
watching your analysis as well.